Hey everybody, Frank Alcini here, CPA, real estate investor CPA, coming at you this afternoon with Blair Clark. I'll let her introduce herself. At you, Blair.
Hey everybody. Hey guys. My name is Blair Clark. I've been real estate investing since 2016. I used to teach elementary school, and then I left when we wanted to start a family and to supplement my income. Now we buy, sell, fix, flip, wholesale, and we have a rental property as well.
All kinds of fun stuff. So
yeah,
we're coming at you from the Michigan Real Estate Investor Network, and on today we're going to try to answer some various questions. Hopefully, give everybody some information, but also wanted to announce this Tuesday, Blair's going to be hosting a investor meetup. And
Yep.
Blair, if you want to talk about that real quick, let you fill everybody in on that.
Yeah, so the network this year is launching a new meetup, and we're calling it the Masterclass. And what we're going to focus on in this is newer investors, ways that you can take your business and build and scale and grow, different concepts and practices that you can apply to your own business. So whether you have been an investor for the last few years and you already have a few transactions under your belt, but you really just want to ramp things up and you want to do more, you want to just scale your business and take on more projects every year. Or if you are absolutely brand new and you haven't done anything and you're just starting to dip your feet in, get your toes wet, that's who the masterclass is geared towards, because we're going to just take the concepts that I've learned and that other people are contributing. So it's not all just my experience and my information, what we're teaching in the class. There's a ton of people within this network that are contributing different ideas and concepts that we're going to be teaching to you guys. And it's all going to be really actionable stuff. So not a lot of fluff. Like, you're going to come to the masterclass and we're going to tell you what you can do, and then you can go actually apply it. So tangible stuff. Yeah, and that's going to be the last Tuesday of every month at the Troy Community Center at Big Beaver and Livernois. And the doors will open at 5:30, and then everything will kick off at 6 p.m. But the thing with the masterclass is every network event that we have is free. But for this one, you have to register, because there's so many people that want to go, but there's only so many seats. So if you go to michiganrainetwork.com and then you just scroll down to network events, you can click that button and then you click on the masterclass, and from there you can find the registration form. So you actually have to register for this one. You can't just be a walk-in.
And we'll include the link, the registration link in the comments to this video. So, and is that in an Eventbrite meeting that you have set up then? So they have to register through Eventbrite? Or
no, it's the event coordinator and the whomever built the website just has a form built into the website, and then that goes to the Michigan REI Network coordinator, and then that person will send you a confirmation email.
Okay, perfect.
So it's not like you have to have a ticket, but you do have to have your name on the list.
Okay.
And you know, it's one of those things where you're welcome to show up and walk in, but if all of the seats are filled, the people who actually registered they're the ones that are going to get those seats, and we really just don't want to have to turn anybody away. We don't want to.
And you guys actually have those scheduled out for the rest of the year, right?
Yeah, yep. Those are scheduled out for the rest of the year. There's going to be 10, 9 or 10. There's a few months that we're skipping. We won't do one in December because it's too close to Christmas, and I don't believe we're going to do one in November either because it's too close to Thanksgiving. So I believe we're going from now until October every month.
So it sounds fantastic. Great. Well,
yeah, thanks. I'm excited. So, I'm excited for it.
Okay. But I know you're an investor, Blair, and I think we're going to try to cover some various questions that newer investors come up with. You and I discussed a little bit, but if we wanted to maybe get started and go from there.
Okay.
So what are some of the different things you've run into through your investing that be able to help with an answer?
Well, I know that the typical tax questions that I had when I was first starting out were the questions like, how do I actually form my tax-related business paperwork, such as like forming an LLC or forming a corporation. And then once you get beyond that, how many LLCs should I create? If I'm going to be doing rental property, should I have an LLC per rental property? How do I form partnerships with people? Different questions like that. So the very first question that I had when I was first starting out was, um, should I form an LLC or should I form some sort of incorporation? So I think that's
Okay.
tax question numero uno on every newbie's mind. What sort of business should I even be forming?
Okay. Yeah,
Entity,
and
I
that's a
guess, would be
great
the better
question
word.
that I hear quite often. A lot of times people will have all the different scenarios. Usually, I like to say, if you're just starting out, one LLC is really just keeping it simple. I mean, if you're going to hold a bunch of rentals and a bunch of flips and a bunch of marketing activities and you hit the ground running and all that happens in your first month, then maybe we should talk and revisit this question. But generally, for the newer investor, if they're going to get organized, I say one LLC until they kind of find their way. Because also, as a new investor, and I think you can probably speak to this, Blair, they come into it with one goal and realize where their fit is or where they're comfortable is a little bit different. And sometimes
Mm-hmm.
rentals or flipping or the different activities. And don't really want to put anything in place that's not used or has unnecessary tax reporting compliance. But then from that LLC, that investor can always grow into an S corporation status, a multi-member LLC, or multiple LLCs, depending on what they have going. And then it starts to become more of a custom tailored plan as they're navigating
Mm-hmm.
developing their business. So usually a single member LLC is really the way to keep it simple and at least be organized from a professional standpoint. But if somebody hits the ground running and starts doing a lot of deals right away, they may definitely want to talk to a CPA and their attorney to also come up with the plan that's going to work best for them in their situation. But great question. I hear that quite often. A lot of professionals have different ideas, but my attitude is keep it simple, especially in the beginning, and don't inundate yourself with a bunch of LLCs when you're just getting started running your business. Focus on running your business, and then
Mm-hmm.
talk about the rest as you figure things out.
Okay, I think a very basic question for someone who has only ever had experience with a W-2 type of job and they've never done anything like entrepreneurial ever. When do I have to file my business taxes? Because I know now that it's different than my personal tax date, but there might be somebody out there who has no idea that
Yes.
it's a
So
different day.
So for instance, with an LLC, and the reason I say keep it simple, a single member LLC is a separate form within your individual tax return. So that's really governed by the due date of your individual tax return. For most people, everybody that I've ever dealt with in my career has been April 15th. Uh,
Okay.
so it keeps it a little simple. But now if there's an LLC that's been formed with two friends or a father son or a husband and wife, that's what's actually called a partnership entity, and
Mm-hmm.
isn't any different in the accounting from a single member LLC, but is actually covered by its own tax return that is due March 15th, along with S corporation filing dates are March 15th. So if a new investor comes to me on April 1st and needs an extension and tells me him and his father have an LLC, they've actually already missed the due date for that LLC. So I like them to be aware that the due date that's actually effective for what they're set up. And that's why maybe when they're starting their business, they don't necessarily need the full advice of an attorney and a CPA, but it's still worth knowing that, because when they set up their LLC, and sometimes people will apply for their ID number on their own on the IRS website, and if they've checked the
Mm-hmm.
boxes, they could be a single member LLC that applied to be a partnership or vice versa and have incorrect information. But really, March 15th is the first trigger date that I say, at least give me a call, let me know what's going on. And if you're a single member, there's nothing to do. But if come to find out husband and wife have a partnership, well, then we don't miss that extension due date. So, and
Yep.
penalty for missing that is $195 per month per partner. So it can get actually pretty pricey if you do miss that and go into the summer months extended. It's unnecessary penalties that have to be paid, and generally can get relief for a taxpayer, but it's just unnecessary time. They need to focus on their business.
Mm-hmm. Well, that's good. Yeah, my husband and I, we have a partnership LLC together, and so we gotta get cracking on sending you our stuff for sure.
But
All right. Yeah.
that's the type of thing, though, that if it's not done by March 15th, there's always extensions that are available.
Mm-hmm.
So, and the
Sure.
extended due date takes you to September 15th. So it does allow you time. It
Mm-hmm.
doesn't necessarily allow you time to pay your tax. So from the W-2 standpoint, we're all used to filing, either paying or getting a refund back at April 15th. But somebody who starts a business generally in the first year might have losses, so it's not as imperative. But if they have
Mm-hmm.
quite a few flips and had a large profit and don't file their taxes till September, the tax that's due is due April 15th. So
Okay.
that would be paid with the extension. So just
Mm-hmm.
understanding those due dates or better estimating what that tax amount is. And that's why it comes down to good books and records and having a good profit and loss statement.
Okay. That's good. That's good to know. So yeah, so I think that like the typical questions that I had as a brand new investor are the same questions that you hear over and over again, like the formation and, just basic tax questions. But as I was telling you earlier, where I'm at now, a few years into investing, is I just realized that I don't necessarily need to be asking specific questions. I more need to be told what questions I should be asking. So really, I think um, that the best question that a newer investor, or at any point in time in your investing career, I think the best question that you can ask is, what questions should I even be asking? So when you go to the experts for either financial or legal advice, just sit back and let them tell you what it is that you should be focusing on at
Yes.
whatever point that you're at. So that's instead of me trying to go and figure out and honestly just Google, like look up and guess. I think these are some questions that I should be asking, because I don't want to sound inept, or I don't want to sound stupid. I want to come to the table with something. Sometimes you can just get humble, or even if you want to just call that wisdom, like just go ahead and tell me what I should even be focusing on and looking at. So for example, when you and I had our initial conference call, you were telling me all sorts of stuff that I wouldn't have even thought to ask you about. So
Yes.
sometimes it's good to just sit back and just ask. So for example, this year, 2019, we wholesaled a property. So my question as a wholesaler, it's the first time we wholesaled a property, and so I don't have experience with filing anything for that. So as a wholesaler, when I receive that assignment fee, what do I do with that as far as taxes go? Like, how do I claim the assignment fee that I received? And then just side note, we did everything through a title company. So the assignment fee was wired to me from the title company. We didn't just do, some sort of exchange between buyer and seller and a check or cash or anything like that. We did things through the title company. So
Yes.
so I guess that's my question is, so
Okay.
the first question would be, on your wholesale assignment fees, what do you do with those as far as taxes go?
So wholesale assignment fees are, and really in tax purposes, you have ordinary income, passive income, and at a real high level, capital gain income. So
Mhm.
I like to think of wholesale income would be ordinary income. And I guess it really comes down to what each person heading down real estate investment is doing. So at a high level, wholesale fee is similar to the profit you receive on a flip property. If if a newer investor had a wholesale fee and is also doing a flip, I might advise them just to group that through the same company. Now, there might be
Okay.
reasons to account for things separately so they can start to measure some of their metrics and stuff like that. But generally, that wholesale fee is just going to be ordinary income as filed on their Schedule C. And if it's through their LLC, let's say Frank Real Estate Wholesaling LLC, I would put that
Mhm.
there. And if I'm also flipping houses, I might put that activity on that same Schedule C or have it through a different single member LLC. So, but the thing with that income, you've probably incurred expenses that are related to that as far as
Mhm.
advertising or marketing.
Marketing for
And then
sure.
there's a lot of
Mhm.
other soft expenses that you don't really even think of, that your mileage to and from the property, to and from the title company for the closing, all those fees or non-cash items that are going to be
Mhm.
expenses that can be claimed against that. So in certain circumstances, the title company will give you that assignment fee, but you're going to have expenses against that.
Mhm.
And really understanding how that all interacts with your business.
Okay. What paperwork should I have received from the title company? What do I need to file with you to show you what that fee was?
So with the title company, they may or may not give you a 1099 on the sale proceeds or call it a commission. It depends how they are treating it, but they may give you a 1099. And on another note, let's say that they don't give you anything, you would still have your closing statement or your check. But if you're accounting for it within your business, you would have that as income, as long as it's accounted for from a CPA standpoint. Not all would necessarily require that you produce the 1099 or the closing statement. If you keep good books and records and your assignment fees accounted for and you know what it is,
Honey, mommy's on the phone.
I personally don't go in and really audit that number if a client's
You
telling
need
me
to go lay
that's
down.
what that number is, but other ones need more assistance. But from their standpoint, I'm more concerned with, once you've told me that
You
income,
need to
what
go lay
other
down.
expenses are there?
Honey, you need to go lay down. Sorry, Frank. I'm convincing a 4-year-old that he needs to go lay down. You
No
need to go lay
problem.
down, honey. Honey, I can take care of that later, okay? Thank you. Yeah, we had a lot of new experiences in 2019, like wholesaling, and so we're just trying to get everything straight with that. Um, yeah, so pardon the interruption there. It's hard to
Oh,
lay
no
down when you're
problem.
4. Yeah, it's hard to keep napping when you're 4. He's
But
trying to negotiate
but
for
see,
more playtime.
and see with the wholesaling
Mm-hmm.
and flipping, that would be something, if it's just you and you're figuring out where you're trying to find your sweet spot and comfort spot, that might be
Uh-huh.
something to run through the same company. Now, if you were real aggressively trying to keep your metrics and everything separate, and there's a reason you're wholesaling and your flipping might be separate, it might be worth setting those up in separate LLCs, maybe for legal purposes, but there'd be no necessarily tax advantages or disadvantages to that. So
Mm-hmm.
that's where I
Okay.
say just keep it simple.
Okay. And then another conversation that we had, and this was a question that I wish I would have asked at the beginning. When we did purchase our flip this year and we started working on it, I didn't ask the question of, what are some things that I need to know, tax related moving forward with this. And so we hired are contractors and we paid our contractors. So what are some things that people who are just getting into flipping properties, what do they need to know before they even hire that first contractor, as far as your responsibility as the rehabber, when you are paying out money through your business? What do you
Great,
need to be able to produce?
great question. I hear that often. So someone is rehabbing a property, dealing with different contractors, getting receipts and paying those with invoices, and everything's documented there. So, but if you're paying a contractor, I advise all clients get a W-9 from them, which is a form that you would give your contractor. They can complete that form, and it indicates to you what type of business they are. And that, and
Mm-hmm.
meaning, are they an LLC, a sole proprietor, or a corporation? Because from there, anybody that you've paid greater than $600 collectively, and that means your LLC, not per flip. Let's say you had 10
Right.
flips that you had $500 payments, you've paid them $5,000 through your LLC. You have to give them a 1099. Generally, if they're an LLC, a sole proprietor, or a partnership, you're going to have to issue a 1099 to their company, and get in. At the time that I hire that contractor, they're going to give me that information, and be easier to get that information from than at the end of the year trying to track down the different contractors you worked with
Mm-hmm.
that may be gone or hard to get a hold of. So I advise always try to get that for anybody you pay in your business. If they're not required to get a 1099, then they'll fill it out and indicate to you that aspect.
Right. So if someone that we've hired is incorporated, they don't necessarily have to be 1099. Is that correct?
Correct. You don't have a responsibility to give them a 1099, but worst case, if you did, then assuming they're already tracking their books and records, there should be no issue. If you just run your system, you give them all 1099s. You're not required to, though, but occasionally a corporation will get one by mistake, or just that's the company's policy. Um,
Mm-hmm.
but there is penalties for not issuing 1099s, and um, I always advise clients you're better off issuing if you're not sure what to do.
Yeah. Right. So for that rehabber that's listening to this and they were like, well, I just did the one flip this year and like crap, I didn't 1099 anybody. What would you have to say to that person? They were just like, oh my gosh, I didn't 1099 anybody. I didn't even know that I needed to do that. And now they're about to file their taxes from 2019 and they're panicking.
So, so there is penalties for not filing the 1099s. Generally, if it becomes an issue, an employer could also be responsible for the self-employment tax, which is or the Social Security and Medicare portion of that, because the
Mm-hmm.
IRS would take the position that that contractor did not report that income. But if it's an expense that was paid out of your bank account, evidenced by an invoice or a contract, generally from the expense deductibility purposes, it's still going to be an expense. Now, if it's somebody you paid cash out of your bank, it's going to be tougher to really evidence that expense to the IRS, and you're starting to walk the fine line of just some hidden landmines in the past. But
Mm-hmm.
um, I understand we can't really change the past. It's really just getting your books and records better every step of the way as you navigate through entrepreneurship.
Okay. And then when you go to sell that flip, so you've gotten all the way through the rehab and now you've got it listed and you are about to sell it, what are some things that you need to know before you sell it or during the process or after? What are things that we need to just be aware of or be mindful of or document in order to give that to you?
So, so really within the flip, you're going to get the proceeds when you sell it. You, in theory, would have
Mm-hmm.
already paid for the expenses. So if you have a good system in place on how to track it, you're going to have it all in running through your bank account. But I also, newer investors, tell them to look through their deal. Right when you're closing on that deal, a lot of good information can be garnered from that, analyzing what your budget was to your actual, and really doing more of a closeout on each job that we thought costs were going to be this amount, and we came in, well, we got some better benefits or we had some overruns. All that information is going to be better information on your next deal. It might have been poor estimating on your part, might have been things you didn't know about, or the market changed and you had to improve the property differently than you originally anticipated. And as an investor, everything you spent on your last deal is a great learning opportunity on your next one, because everything in real estate is unique to many items as far as market, timing, everything. And if you learn that it could be a bad deal, it was bad estimating, and also you can really firm up your numbers and what you actually made on that when it's all fresh. So I like to tell investors, try to get that closeout and done as soon as possible, rather than this time, meaning February of 2020, trying to figure out how much they made on that flip they closed in July of last year.
Gotcha. Is there any sort of paperwork that they should be looking to collect when they sell it, like through the title company?
Well, generally for accounting, they're going to get their closing package, which will have their seller's statement, and they might
Okay.
have sold it for X amount of dollars, but walked away at closing with much less, or not necessarily much less, but a lesser amount. All of those items that they actually paid for through closing are going to be expenses. So
Yep.
from an investor's mindset, the net might be what they made on it, but they really sold it for that selling price, and the rest is going to be expenses against that deal also. And then the net hits their bank account. So the better that they get everything reconciled is going to work.
Okay.
Okay.
All right. I'm just jotting this stuff down. And then, so my husband and I, we also have a rental property. So my questions on rental would be, when you're purchasing that rental property and then you're paying out all those expenses for it, there's all sorts of different like ways that you can have the rental property. So for example, my husband and I, we are house hacking a duplex right now, but we are getting ready to move out of our duplex and live in a single family. We're going to keep the duplex and rent it. So from the house hacking perspective, what can I claim? What can't I claim? Trying to be clear here, but as far as expenses, I know that whatever we're spending on our own unit is not counted toward the actual, business of having the rental property. But then, I guess I would just go back to, like, what are the questions that I should be asking, like, as somebody who right now is house hacking? What should I be accounting for, and what doesn't even count
Okay.
as far as my end?
So normally on your personal residence, if you did any improvements to the property, and you and your husband, you're able to exclude up to $500,000 on that property. So a lot of times improvements tend to get lost in that process. But I think, as you've described, you have a duplex that you're living on one side, renting on the other side.
Yeah.
And then you're going to be transitioning out of that and turn that into a full 100% rental. And
Yep.
there's some costs that you've had during the time you've had that property. You purchased the property, then you probably did some renovation or repairs to get your side or the other side rentable. The side that was rented for as a business, those would be business related expenses, and normally the expenses you paid for that personal residence aren't going to be deductible, which they're not going to be deductible. But when you convert that unit into a rental, you're going to want to know that total, because your new depreciation should pick that up, because your unit you're living in, you have your cost plus any repairs that you've done to that side that when you lived in it were not depreciable, but they would add to your basis now when you rent to your new tenant, let's say in a few months. So that's something that's not really measured, or at least captured a lot of times, because somebody might have bought it, fixed it up, and done some repairs and has really lost that information. But one of the things right now, your utility bills, is assuming they come in one large bill, it should be allocated between the rental unit and your personal side of things. And then going forward, once you convert it 100%, you would just take 100%. So some bills should be allocated if they're not specifically identifiable, but a lot of your improvements to that asset should also be tracked if they weren't previously depreciated on the meaning for your personal side.
Okay. So whatever utilities the tenants pay, we're obviously disregarding those.
Yes.
But we're going to be, paying the water bill, for example. So that's something that we can just collect and put that together as an expense. Even if we have it built into the rent per se, we're trying to absorb paying for the water. So the gas and electric is split, but the water is just one. And so we just get one collective water bill. And so we're guesstimating, just based on how much water has been in the last 2 years that we've lived here. We're guesstimating this is what the one unit will use, this is what the other will use. And so we're baking that into the rent. Is the term. But would we still claim the whole of that water bill since we are paying it out, or are we not able to, since we are trying to just include it in with the rent?
Well, what's included in with the rent is going to be income to you, and assuming that you're living in there, you would allocate that water bill some to your personal side, which would not be deductible, and then the other side as a prorated amount, depending on use, and some reasonable amount. Not sure you can estimate that, but then when it's fully unit, or when both units are fully rented, it'll be 100% deductible. You might want to maybe split it. Let's say you might allocate a little higher if you have a family of 6 living on one side and a single guy that's not there too often living. You might allocate it a little differently, but otherwise that would be deductible. But while you're living on one side, a reasonable allocation to the business side should be deducted, and then really backing out your personal use.
Okay, so if you as a landlord pay for a utility, but you have tried to guesstimate and you've baked it into the rent, you just claim all of your rent as income, and you just put all of your utilities as a deductible, and it just kind of like even out in the end. So Correct. You don't have to necessarily say, okay, because, let's just say we assume that the water bill will be $150 per month. And so one unit will pay $75, the other unit will pay $75, more than what we would have originally charged them in rent. So we don't have to try to collect and capture like the differences. So say 1 month it was only $130, or 1 month it was, $195. We don't have to try to volley back and forth between those. We just say, here's this one lump figure, here's this other lump figure, and then it just all kind of evens out then.
Correct. I mean, only way you would have to true that up or something is if, let's say, my rental agreement said we were going to do that at the end of the year, I paid you $150 per month, you'll add it up and I owe you the difference, or vice versa. Well,
gotcha. No, we're not going to try to
estimate
do
safe
that
on your side and just keep the expense.
Yeah. Yep. if we've guesstimated wrong, then we'll figure it out the next time we sign a lease, that type of a thing. So if we just have to eat a little bit of it, that's just kind of like the guess and check we're going through.
Okay.
All right. Well, awesome. Yeah, I think I just have one more question written down here that I would want to ask you here. Okay, so when I then go to sell the rental property, let's say I'm sick of being a landlord, or I just want to sell off a rental property or two, what would that income be counted as? Is that again ordinary income, just like the profit from a wholesale or a flip,
Okay.
or is
So
that different?
So rental income is going to be different. It's not going to be ordinary income in the sense that it's subject to self-employment tax, but it's generally going to be capital gains income for the sale of that property. But there is
Okay.
what's called depreciation recapture, because let's say you had a property for $270,000, depreciated at $10,000 a year. 9 years or 10 years later, your cost in that is only 170,000, or not cost, your basis. So if you sell it for 270, from an investor standpoint, you bought it for 270, sold it for 270, but you might think you broke even, but because you took depreciation, there could be some recapture to come back in on that. That could be taxed at higher than capital gains rates, but it starts to get, depending on the situation, a little more complex. But that's why the perfect situation to discuss with your CPA. I advise clients, if you're looking to sell or buy a property, let's at least talk about it. It might be a quick 5-minute conversation, or it could be a complicated calculation, really depending on the facts and circumstances. But that's why rentals I like to treat differently than flip property. And in a perfect world, they're going to be in a different LLC. It keeps things, you have your flipping LLC and then your renting LLC. And those are two distinct purposes. And for tax purposes, the bigger you grow, you will want to wear those different hats, an investor versus an active/developer, because worst case, you don't want to do a bunch of flips and have a short-term property that was going to be rented and comes back that it was actually a flip property, and it becomes ordinary income. So that's where a little planning, but I think through the growth process. But as a new investor, I always tell clients, and reach out to me. Sometimes it's a quick call, or we can talk about it later. It's always tough to meet me this time of year and tell me all the things you did last year, as opposed to, we're coming to closing next week, is there anything we should know, and can bring that up. Your advisor's going to know your situation a little bit closer and can really throw out some quick advice if it's going to impact your situation, that's easier to change before you get to the closing table than a year later.
Okay. Yeah, and I think that's really the wisest thing that a new investor or any investor really at any point can do is, before you do anything, just get advice from those professionals in your circle, the professionals that you need, whether it's legal advice before you pursue with something, or you're asking a financial advisor, or you're asking your accountant, is really before you tackle the new strategy, or even if it's your second or third time, it takes a while to get a hang of something. Just ask those questions before you even dive in. Basically, just, what do I need to be collecting throughout this process? What do I need to be looking for? What do I need to be doing or distributing? Such as you need to collect all of your receipts and invoices and keep track of them. And I know that seems basic. That was something that I understood going into it, but I just know that there are people out there who are like, I should have kept those receipts, so that's just really something. And so just whatever project you're about to dive into, just ask those, like, if this then type questions. Like, if I do this, then what should I do? What do I need to provide to you as the professional so that I know that I'm covered legally, financially, and, Uncle Sam's not, calling you, knocking on your door
Oh, yeah.
in the future. So yeah, I think really that's the wisest thing that a new investor can do is ask those generic basic questions at the beginning for sure. But if you don't know what questions you should be asking, then just ask, what questions should I even be asking? Because stuff that you think about is going to be illuminated to you. So.
Okay. I think, yeah, absolutely great information. And I think really just knowing how to navigate, and I think networking also is the big thing. A
For
lot of
sure.
times talking to new investors, but also keeping in mind what applies to you, Blair, is going to impact somebody else differently, depending
Yep.
on family, kids, other W-2 jobs. Everybody's situation is unique. I think there's a lot of great information, and just want to remind everybody this Tuesday, Blair's event for new investors. Come on out and network, learn, and hopefully everyone can pick something up. But from there, really just taking in as much as you can get. One side, you can't learn too much, but you have to stay open-minded because, like I said, what applies to Blair, and she might tell me something that works for her, may not be exact for me, depending on our personal situations, but at least it's kind of a good roadmap. It's kind of like she told me how she got on her cross-country route. It worked for her. I have an idea where to go, but I might take a slightly different path depending on where I want to go and what I need to see. So,
Yeah,
yeah.
that is a good point. Is definitely ask the people in your circle what they're doing, but don't take that as gospel for yourself because your situation might be different. So they can give you a good idea, or they could give you a good contact for who you could ask. Like if you need, what did you do in this legal situation? Well, that's fine that you're having that conversation with your fellow investor friend, but go ask, an actual attorney what you should do in your own specific legal situation. And then the same thing applies with taxes. So that's a good point too. Not everything is, you can't just blanket statement everything. Some things are going to be very specific to your own personal situations.
Okay.
Cool. Well, this was good, Frank. Thank you so much for your time. I appreciate it. Thanks for letting me ask some questions and pick your brain. And thanks for promoting my upcoming meetup. I'm really excited for it.
Yes.
And it's, the network hosts a lot of really great events, and everything is free. So if you guys are just looking for something to go to, anything, doesn't have to be mine, just go to michiganreinetwork.com and just scroll down to where it says networking events. And we've got something going on, a couple of nights each week. So you'll see some good stuff.
Hashtag the network.
Yep.
The private Facebook group, join that. A lot of wealth of information in that, and visit the page, and all the events are listed there. So look forward to seeing everyone out, and talk to you soon.
All right. Thanks, Frank. Take care.
Bye.